Welcome back to Confident Real Estate. I'm your host, JC, and on today's episode, I'm going to show you a treasure map that's going to lead you to fortunes beyond your wildest dreams. If you want to be a real estate millionaire, perhaps many times over, then you can't just go out and buy a property or two and expect the cash to come pouring in. You actually need a roadmap that's going to get you from where you are right now to where you want to be. And then you're going to have to stay that course and put in the work to get to that final destination. There's no magic genie that's going to grant you your wishes, and I'm certainly not selling you some get rich quick scheme. I'm not selling you anything at all. I'm just going to give you the information you need to become a real estate millionaire, but it's going to be on you to act upon what we cover right here today in this video. Today, I'm going to teach you how to identify the 4 phases of a real estate market cycle, because the whole point is to buy low, sell high, and enjoy the cash flow and the growth in between. But it's very hard to do that if you're driving through a thick fog with no idea where you're going or what the opportunities you're looking for actually look like. So I'm going to clear up that fog for you in this video, and I'm going to show you one of the most crucial aspects that you will need to know to become a millionaire from real estate investing. It's just not possible to become a millionaire real estate investor if you don't know how to read market cycles. You absolutely need to watch this video all the way to the end. If you buy into the BS that you can buy a piece of property or invest your money in some stock and just kick your feet back and you'll become a multimillionaire many times over, then this video is not for you, and I don't want to waste your time, so you should click off now. This video is for people that understand that real investing requires active participation. It's not going to be a full-time job, but it is going to cut into your TV time after dinner a few nights a week. But if you really stay on top of it and you stay active in your investing and monitor what you're doing and you educate yourself about how to do it properly, you can become a millionaire many times over, and it won't even be your full-time job. So what are the 4 phases of a real estate market cycle? Well, the first phase is the expansion phase, when growth is happening and prices are on the rise. After that comes the equilibrium phase, and the equilibrium phase is where things start to stabilize and prices slow in their growth, value slows in its growth, and everything kind of hits a plateau. Then comes the decline. The decline is quite obviously when prices and values drop. Sometimes a little, sometimes a lot. After that is the last phase, and that's the absorption phase. And the absorption phase is when we start to see market indicators that things are in a recovery mode and prices and values start to climb a little bit again, slowly. And that will eventually lead us back to the beginning of the cycle, the expansion phase. The first destination on your road to wealth is going to be the expansion phase, like I just discussed. If you get in early enough, this is the time that you will strike and you will make a fortune. You've saved up your money and you've been waiting and you've been watching your local markets that you like to invest in, and you've spotted the market indicators. And those indicators are things like population and job growth. Maybe your local government officials are creating government initiatives and incentives to bring in corporations and entice them to build factories in that target market or relocate headquarters in that target market. And maybe you have low taxes or no state income tax. Those are things that are market indicators that will show you there is growth and positivity and you are in the expansion phase. So you want to go forward and look for properties that are dated, maybe a little older, but in desirable locations like near downtown. Those are properties that are primed for you to buy, renovate, rent, refinance, and repeat. The BRRRR strategy. I think I got enough R's in there. Those are those types of properties where you are going to buy before the explosion happens, and you are going to ride a huge wave of equity appreciation during the expansion phase all the way through to the equilibrium phase. Long neglected areas are going to start to see some form of gentrification. It's going to be a seller's market, and buyers are going to compete for the relatively low inventory of houses that are on the market in that area. You're going to see sellers getting well above their listed asking price as they compete with multiple offers that are one more enticing than the other. You're also going to notice that properties don't sit on the market very long. They usually go pretty quickly during an expansion phase market. Eventually, developers will move in with dollar signs in their eyes, trying to cash in on the expansion phase, and they will try to outdo each other and beat each other to the punch because they know at some point in every expansion phase cycle, there will become a glut of inventory. And when there's multiple options for buyers to choose from, that affects the value of the options that are on the market, and prices will start to drop, and that will bring us to the stabilization phase known as the equilibrium phase. So, what's the investment strategy for an investor in the expansion phase? Well, if you're a newbie to real estate investing, it might be hard to time it. Unfortunately, you might not have the confidence or the experience to really get in early on and trust yourself and your instincts. But that's okay. For most of us, we didn't jump in on an expansion phase first go round and cash out. It typically is the point in time where you get in early and you do some house flips, or you wait until the later stages and you sell properties that you bought during the decline and absorption phases. And the indicators are going to be that suddenly houses that would only stay on the market for a week are now staying on the market for 3 weeks to a month. That'll show you that it's starting to slow down and we're starting to get to the point of the equilibrium phase on the horizon. So that's when you sell those properties you bought significantly lower in the decline and absorption phases. And again, you want to get in early on the expansion phase. If you wait too long, the last thing you want to do is buy at the peak of the expansion phase when values are at top dollar. You're not going to get that money back later on. You're going to have to wait possibly a couple of cycles until you have an expansion phase where you've had some form of equity increase. It is not ideal. So if you're a newbie, don't worry that you're in an expansion phase and you feel this urge to cash in. It may be okay to wait it out if you're not confident and you're not sure that you're at the beginning of the expansion phase. You may be closer to the end. Your second stop on the journey towards wealth is the equilibrium phase, which arrives when the expansion phase reaches, well, overexpansion. Suddenly, there are a lot more listings on the market, and the general public gets the sense that things are beginning to slow. Job growth and corporate expansion has also slowed, and because of that, there aren't as many buyers in the market looking to buy real estate as the equilibrium phase continues to carry on. On top of that, real estate listings, several months earlier, they may have been selling in a matter of weeks. Now, in the equilibrium phase, they're taking 3 to 4 months to sell and maybe even longer. As the equilibrium phase continues towards its latter portion, the listings will stay on the market even longer, and it's really becoming a buyer's market rather than a seller's market. And many sellers, in order to close on their pieces of property and sell, are offering concessions they wouldn't even have considered 6 months, maybe 12 months earlier. Towards the beginning of the decline phase, you'll start to notice real market indicators like vacancies in shopping and retail centers. And on top of that, you'll see multifamily landlords offering incentives and concessions in order to rent up their units because most of them have become very aware of how real estate market cycles work, and they want to get their units occupied with people who are quality tenants, even if they have to take a cut and a loss during the next 2 years because they see the decline coming. So what's the investment strategy for the equilibrium phase? Unfortunately, this is the phase where a lot of investors get burned because they don't want to believe that the expansion phase has really ended, and they get a little greedy because they've been enjoying those good times during the expansion phase. Here, in the equilibrium phase, really pay attention to the market indicators. If the expansion phase is over and things are slowing and properties are lingering on the market, don't ignore that. If you're looking to buy into a deal, then this is the time to go and get some off-market deals from distressed sellers who need to sell and get out before the eventual decline phase. Some sellers will recognize that that's coming and they'll be willing to sell at a somewhat significant discount in order to get out before everything falls apart. And you can pick up some great properties with very little competition because they're off-market. However, if you're looking to sell a property that you have, If you have great equity and you want to get out before you go into the decline phase because you're not willing to ride out the entire cycle again, then understand you're probably going to have to sell at a discount of some sort, usually 10% or more below market. If you don't have to sell or you don't have the equity, you might want to hold on and ride out the market, and then you can sell as you get to the top of the next expansion phase in the cycle. Up next is unfortunately the decline phase, and that's phase 3 in the market cycle. At this point, it's pretty much self-explanatory. The easiest way to spot a decline phase taking place is to watch employment trends. Suddenly, unemployment goes up, government offices start to cut their budgets, school teachers may start to lose their jobs, and eventually it's going to become evident to everybody that the market is in a decline. And at that point, you're going to start to see people leaving and going to seek other opportunities in other markets. At this point, developments have stalled, real estate prices have plummeted, and listings sit on the market for month after month after month, and they're lucky if they even receive lowball offers. At some point, local government usually tries to jumpstart the market and speed up the end of the decline phase by offering some kind of government incentives and initiatives and maybe some opportunity zones to entice development. But in reality, the decline phase is where the distressed opportunities really exist for investors who have saved up their cash reserves and waited for this point in the market cycle. So if you sold a property previously in an earlier phase in the market cycle, like say the peak of the expansion phase where you sold for top dollar and you didn't reinvest your cash yet, now is the time to buy. Maybe you've been saving your money and piling your cash, stockpiling it, waiting for this moment. Here it is. You buy Class A and Class B properties only, preferably B plus and above during the decline part of the cycle, because you are one of the few people that has cash on hand and you are going to get amazing deals from distressed sellers who need to get out. And you will probably get those Class A and B plus properties at such a significant discount that even if you hold them for years and you ride out the next market cycle, they'll still cash flow even in the next downturn market, because you will have so much equity value in them that it'll just justify the purchase in a decline cycle. As far as anything from a Class B minus, a Class C, Class D, things that are typically what all of us investors go after because they're pretty much recession resistant, when Class A and B renters start to cut back during downtimes, don't buy those now. Buy Class B minus, Class C and D properties during the next phase in the cycle, the absorption phase. During the decline, you want to pick up those diamonds in the rough that you are going to hold on to. You can also start looking for maybe bigger projects during a decline cycle. Just be aware of your market. Make sure the population growth really is poised to come back. Look at how many other multifamily landlords are out there in your area and how they're doing, and if there's any new development coming. But this may be the time to scale up and go for that commercial property that has 10, 20, 30 units in it that you would normally stay away from in other parts of the market cycle where they're just priced a little bit too high. If you're going to buy them, you buy them in the decline phase of the market cycle because you're going to get a deal that you will never get in another part of the cycle. So just do your homework, but cash in when it comes to the decline phase. This is where investors make their money. And if you've watched this channel, you know I say it all the time. You make your money when you buy, and this is where you buy. The last stop on the market cycle is the absorption phase. And this is when prices stop dropping and they start to stabilize again. And for many investors, the telltale sign is that suddenly foreclosures become competitive again because there's not the glut of them that we saw during the last phase, being the decline phase. Things are starting to stabilize, and it's a signal that they're about to go back up on the upswing and another expansion phase is coming. You're going to notice that unemployment starts to ease and jobs start to come back. And with new jobs and opportunities, people start to move back and population growth starts to trickle upward again. At that point, it starts to level out and it becomes a seller's market a little bit more again, at least fair, and it's not a strong buyer's market anymore. At this point, you should picture it like a spring day where there's still snow on the ground and it's a little bit chilly, but the sun is beaming on your face and the temperatures are starting to warm. So, investment strategies for the absorption phase really focus on cash flowing properties because at this point, the Class A and Class B plus properties are far too expensive, once again, to ever cash flow decently, let alone in a downturn market. So, you're going to move on past those. The time to buy those was back in the decline phase. If you missed it, look out for it when the cycle comes back around yet again. Right now, during the absorption phase, you're looking to focus on cash flowing properties, and you're going to look at B minus and C plus properties that are in solid neighborhoods that have historically had a great demand for renters. And statistically, they're solid. They're going to see a bump in equity appreciation, especially as we roll on into the next phase of the cycle, which is again the expansion phase back to the beginning. And you're going to ride that equity appreciation up to the peak of that phase. And at that point, you're either going to sell or you're going to hold it long term and continue to enjoy a really nice cash flow even through a downturn market. That's it. Those are the phases of the real estate market cycle. And as you learn to identify them and make the right moves during each phase, you will see your real estate investing success soar, as will the balance in your bank account. Remind yourself daily that real investing takes active participation, and discipline will never lead you to failure, just like excuses are never going to lead you to success. So don't make excuses. Stay disciplined and make millions instead. Once again, hit like if you haven't already, hit subscribe while you're at it, and if you have questions about what we covered here, leave them in the comments below and I'll do my best to answer them for you. I really hope that you take heed of everything we reviewed here, because understanding the real estate market cycle and each phase within the cycle is the cornerstone and foundation to having success and making a lot of money in your investments in real estate for you and for your loved ones. I appreciate you watching. Until next time.